OC Financial Media presents, in association with CHL Mortgage, as heard on KTLK AM1150, from LA to Orange County.
Your host, Dino Katsiametis.
It's about your real estate. It's about your money. From your estate to real estate, it's Money Matters with Dino.
Welcome back to Money Matters with Dino on K-Talk AM1150. We're here every Saturday afternoon from 12 to 1. And if you missed any part of the show, you can always look us up online at moneymatterswithdino.com, or you can go to our Facebook page, facebook.com/Money Matters with Dino. Also, if you want to get a hold of me and just talk with me direct, or any of my guests here today, call us at 949-720-1616. That's 949-720-1616. This next segment is brought to you by Reverse Mortgage Educators. These are the guys that taught me a valuable lesson, because I had kind of a bad, I guess I didn't have the knowledge I should have had on reverse mortgage, and I thought they weren't really as good as they are. After I listened to them and I did some investigation, I realized that if you are over the age of 62 and you own a home and you're living on a fixed income and it's just not enough, it's something you should look into and at least get educated on them. Reverse Mortgage Educators. We had them on the show, and I'm a true believer in them. So if you want to get a hold of them or just talk to me directly about it, call us at 949-720-1616. All right. Also here on Money Matters with Dino, we're doing this new thing where if you want to find out the value of your home, instead of going on Zillow or any of those other websites, just give us a text message. All you have to do is pick up your phone, text the word appraisal and your address to 313131. Text the word appraisal and your address to 313131. And I'm going to have one of my trusted advisors get back to you guys within a 24-hour period with the true, accurate value of your home. All right, joining us today in our discussion panel with the experts, we have real estate litigation attorney Tim McFarlin. How you doing, Tim?
I'm good, Dino. Thanks for having me. This is a really interesting topic you have set up here for us.
Well, you are definitely the right person to answer these questions we have today. And can you just tell us a little bit about what you do? I mean, I know you've been bankruptcy attorney, loan mod attorney, and just kind of a reorganizational, but you also have, sure, I think, econ major and accounting major. And I mean, you're kind of well-rounded here.
Well, thank you. Yeah, my background has originally been in real estate litigation. I was just telling the group before we got on the air, I started off in this business a long time ago doing TILA and RESPA loan origination lawsuits, which oftentimes turned into a modification or a workout on loan terms for the homeowner. So we were doing modifications before there really was such thing as modifications, mostly through litigation, but sometimes directly with the lenders. So that's where I started. And then with the crash and the meltdown of real estate prices and the loan climate you were describing earlier, the business really got busy with everyone not having the refi option and needing a modification or needing some kind of payment relief. So as you know, the practice area and the business sort of just developed from there.
Well, thanks for coming on the show. We're looking forward to hearing your expertise.
Absolutely.
Jessica Griffith, Realty One, OCD Realty. How did you come up with that name?
In real estate, you try to brand yourself with something that encompasses who you are as a person. And so I was, going over this with my brother-in-law, and I said, I need something that really encompasses how I am as a realtor. I'm really on top of things. I'm crazy about my job. I'm very passionate about what I do. And he's like, OCD. I said, wow, that's really catchy. I am an OCD realtor, but you can't use realtor because you can get sued for that. So we came up with OCD Realty. And then to kind of soften the blow, because we didn't want to offend anybody out there with OCD who thought I was being offensive, we came up with opening closed doors, because really in real estate, that's what I've done for a lot of homeowners, whether they're going through a distressed short sale, helping the banks with the REO listings or just doing a standard sale or a flip property. We're always opening closed doors through our negotiations.
I love that. That's actually a really great saying. Now, you've been very much so on the foreclosure side of things, right? Short sale side of things.
Yes. In 2007, I started working for one of the top REO brokers in Orange County. And at that point, we were managing about 300 to 400 assets a year. So we were doing the property management, and I was primarily working with the negotiations and the transactions. So through that experience, I began listing foreclosure properties with the banks. And when the traveling just got to be a little bit too much on my family and the REO slowed down, I transitioned over into short sales, which is where I focus my niche on right now.
Okay, great. Well, thank you for coming to the show here today, and we look forward to your expertise in the matter. So if you guys don't mind, let's just get right down to it. Tim, let's start with you. The first thing that comes to mind when fighting the banks is loan modification. Before we really get started on all the other stuff, can you try explaining what a loan modification is?
Sure. A loan modification is when a homeowner is struggling with mortgage payments or for whatever reason is unable to meet their monthly obligation on the mortgage, whether it's adjusted upward on an adjustable rate or recast or for whatever reason, and they go to the bank and just try to work out better terms, a lower payment, extend the term of their loan, reduce their interest rate, any kind of change in terms of the loan which reduces the homeowner's payment would probably be considered a loan modification.
And is it common to, I've heard many times over, the interest rate or the terms of the loan, maybe from an ARM product, a 5-year ARM to a 30-year fix or something. How many people are being successful actually lowering the principal balance?
Oh, principal reductions are pretty difficult. It does happen from time to time. We've had a handful of clients who we were able to get principal reductions for, but I always tell clients don't expect it. I don't want anyone to have that as an expectation because it is so rare. It's uncommon. There's no formula to get a principal reduction. It's one of those things that if it happens, you're just fortunate and you're lucky. You were able to get the principal reduction, but there's no way to force it. There's no way to insure yourself or guarantee yourself a principal reduction. It's frustrating, I know, because so many people are interested in principal reductions, but there's no certainty. It's just one of those things. If your lender wants to do it, they'll come through with it.
Got it. And we've heard many times over that if you're not late on your payment, chances are you're never going to get a loan modification. Is that accurate?
Well, it is for the most part. It's not impossible to get a loan modification if you're current. One thing homeowners can use is a what they call imminent default. If they can show that they've had a change in their financial circumstances, which will in the very immediate future lead them to default, making payments from savings, loss of job, a medical condition that's going to lead them to default, and show that to the lender in a convincing manner. It is possible to get a loan modification without going behind on payments, but again, it's difficult. It's making an already difficult process even harder.
Got it. So what are the actual qualifications? Earlier you said there's no recipe, for getting a principal reduction, but is there a recipe per se or a formula for getting to actually qualify for a loan mod?
Sure. Well, there's a lot of different programs. There's government programs, HAMP and HARP, and various other California state programs. So there's many different ways a homeowner can qualify. The procedure for trying to qualify for those is all about the same. The homeowner would submit their financials, demonstrate to the lender what amount they can pay per month. Obviously, it's going to be less than their full payment was. And then, hope the lender can fit them into one of their particular programs. As far as a recipe or a formula for getting a loan modification. There isn't any such thing at this point. What we usually suggest as a general rule of thumb is you want your mortgage payment to hit about 30 to 33% of your gross household income. If you hit right in that range or pretty close, that's going to give you the best chances of getting a loan mod.
Okay. If you're listening right now and you're having problems affording your home, or you're thinking that the bank is being unfair, give us a call at 949-720-1616. That's 949-720-1616. It's not very often you have an attorney giving out free advice, so make sure you call. Jessica, as a real estate agent, you, I would imagine, especially in the field you were in with the short sales and foreclosures, that even though you're not an attorney, you probably were doing a bunch of stuff that attorneys do in negotiating with the banks. Is that something that you were heavily involved in?
Sort of. It's almost like combining a loan modification with the sale of your home. So you submit a similar modification package to the bank, demonstrate that you can no longer afford to keep the home and that your only option is to sell. But unfortunately, being upside down, it results in a short sale.
And if you are upside down and you want to sell your house, I mean, it seems like the bank would accept that. Is there ever a situation where the bank doesn't allow you to sell it, doesn't accept the short sale?
I think one of the biggest problems that we run into in our industry with the short sales is when the BPO agents are sent to the property to give the bank an opinion of value. Mm-hmm. And they're paid a very minimal fee for this work, which requires more time than it really should out of a realtor. So oftentimes they will over-evaluate the property. So when the appraisal comes in too high and the bank wants an unrealistic price for the property, we can't sell the property. It goes into foreclosure.
Got it. Now, the market has changed quite a bit. The values are starting to go up considerably. Are there still short sales available?
Definitely. I think we're going to see probably a second round of short sales here pretty soon, because a lot of the modifications, and Tim, you may want to interject on this, a lot of the modifications that were done in 2008, 2009, they were staggered interest rates. So eventually they're going up to the fully amortized interest rate that they originally had, which means homeowners are going to be upside down on payment again.
Oh, interesting. That's a good point. Tim, would you find that to be accurate?
Yeah, that sounds pretty accurate. I remember back 07, 08, 09, they were doing a lot of 2-year and then adjustable, or even 5-year and then adjustable loan modifications, what they would call a step plan. So a lot of those are going to start getting pretty expensive.
So let's say there's still somebody out there that's underwater and they don't qualify for a loan modification. What are their options if they want to avoid foreclosure? Is there any other options out there?
Well, there's always bankruptcy. However, if a homeowner's not qualified for a loan modification, if they're not able to secure the bank's approval for that loan modification, it usually means that they don't have sufficient income to support their mortgage payment, unfortunately, which is also going to negatively impact their ability to be able to get a Chapter 13 plan confirmed to keep their home. So unfortunately, if the loan modification doesn't work out, they're probably going to be, better off doing a short sale at that point.
So I have some questions regarding that, but I know we got a break here in a sec. Phil's giving me that evil eye from the corner. You're listening to Money Matters with Dino on KTalk AM1150. We can be reached at 949-720-1616. That's 949-720-1616. Or you can check us out online at moneymatterswithdino.com. We'll be right back as we talk about fight the banks and keep your home.
50 years ago, you didn't have any worries. You danced the night away. But the music slowed down. And now you have financial worries and woes you never thought you would be faced with in retirement.
I'm so afraid that my husband and I aren't going to be able to afford to live in our home.
Thousands of people have chosen to put a spring in their financial step by taking advantage of a government-insured reverse mortgage loan that turns the equity in your home into tax-free cash. You can use the cash for whatever you want. Pay off medical bills, credit cards, travel, and start to enjoy your retirement. Best of all, you still own your own home. Call now. Find out how you can qualify for a life without monthly mortgage payments. Call now, and we will send you a free DVD that will explain if a reverse mortgage is right for you. Call the number on your screen right now. No obligation, just education.
Mortgage professionals, are you looking for a company that values you as a loan officer? One that can provide you with the tools you need to grow your business at your pace? Then look no further than CHL Mortgage. CHL Mortgage provides you with a full range of residential loan products and services. You'll be backed by an exceptionally trained team of professionals that can take your clients as seriously as you do. Your clients will be treated with dedicated service, personal integrity, and exceptional professionalism. You'll be able to guide them in the right loan with competitive rates and keep them on the road to achieving life's goals. To get started on advancing your career, call Dino with CHL Mortgage at 949-720-1616. That's CHL Mortgage, 949-720-1616.
Welcome back to Money Matters with Dino on K-Talk AM1150. If you have any questions at all about our topic today, fight the banks and keep your home. We're speaking to attorney Tim McFarlin and local real estate expert Jessica Griffith. They are sitting here answering questions, and we're trying to give you guys the options and the resources that you need in order to protect yourselves from losing your home, whether it be in a bad short sale or a foreclosure, loan modification, or even if you're in the middle of filing for bankruptcy or thinking about it. So if you have any questions at all, 949-720-1616. And if you miss any part of the show, you can always go to our website, moneymatterswithdino.com, and we typically have the show up there by Monday morning. So we were, just before we left off, we were talking about the bankruptcy, and if you're avoiding foreclosure, I should say you're not approved for loan mod, you want to avoid foreclosure, what are your options? Tim had talked about the bankruptcy as an option, but if you don't typically qualify for a loan modification, you probably won't qualify for the bankruptcy and be able to save your home. But Tim, my question on that is I know when I was going through my own personal loan modifications and all that, I mean, I did it several times because I had several houses at the time, and it was truly one of the most frustrating situations I've ever been through. And I'm in the business. I'm used to putting together loan applications. I'm used to answering sometimes ridiculous questions, but it couldn't have got more ridiculous. Sure. And it really didn't even matter. A lot of times, it was I gave my numbers. They told me I wasn't qualified. So then I told them, well, those aren't accurate. Let me change them. And they said, okay, what are they? So I would imagine, though, people don't know what to really say when they're talking to them. And a lot of times they say what they think is right, and that ends up killing the deal. And a lot of times, even though they ask for tax returns and they ask for things, they don't even know how to read them in the loan modification department. And it seems like nobody there is really qualified enough. It's just a checklist that they're trying to put stuff in the file. But if it goes to bankruptcy court, it's going to be scrutinized the right way, and income is going to be calculated properly, I would imagine. But I'm not familiar with that place. Isn't there a better chance somehow in bankruptcy to save your home? And I might be wrong, but can they restructure the deal in bankruptcy court?
Well, you raised a few different issues. I'll address the bankruptcy court issue first. When you file a Chapter 13, what you're describing is a Chapter 13 bankruptcy for a consumer. When you file a Chapter 13 bankruptcy, you have to demonstrate to the court that your income is sufficient to make a full mortgage payment under the original loan contract, not a modified payment, not a reduced payment, but whatever the mortgage contract originally said, that's your Chapter 13 mortgage payment. There isn't any way to force the lender to take a reduced monthly mortgage payment on your first, at least.
Would they be, and sorry to interrupt, but would they be more inclined to complete a loan modification when it's in bankruptcy court than they would with if a person was going directly to the bank themselves?
There's no loan modification in bankruptcy court. If you're in a Chapter 13 bankruptcy or any kind of bankruptcy, your file is going to be coded with the lender as a bankruptcy, and it's going to be in the bankruptcy department. The bankruptcy department doesn't do loan modifications. You're not going to be able to get out of the bankruptcy department and into the loss mitigation or workout department, which is what you need to get a loan modification, until you're out of that bankruptcy. So bankruptcy is kind of a blessing and a curse. You get the benefit of the automatic stay, so the lender can't foreclose unless they get permission from the court. But at the same time, you shoot yourself in the foot in regard to trying to get a reduced mortgage payment.
Got it. And is there ever any success in getting loan modifications after the bankruptcy?
Well, sure. Bankruptcy, the two aren't really related as much as you might think they are. Bankruptcy a lot of times is used as a tool by homeowners to stop a foreclosure sale or get everything put on hold, buy themselves some more time. And then after the bankruptcy runs its course, whether it's a Chapter 7 and they get a discharge, or it's a Chapter 13 and it ends up getting dismissed or voluntarily dismissed, the homeowner can certainly go right back to the bank and apply again for a loan modification, and may, in fact, usually has a better chance of getting it, frankly, because they will have discharged or gotten rid of a lot of their debt, a lot of their other obligations. And so they'll be a more favorable, more attractive loan modification candidate to the lender at that point.
Got it. Okay, great. Jessica, you do a lot of short sales. Several years ago when this whole short sale thing came up, it was still very new. The banks, in their defense, didn't even know what the heck to do. I mean, it was a department that probably had either 0 to 2 people working in it that all of a sudden probably grew into being their biggest department. So they weren't really equipped with handling it, and it was a nightmare dealing with short sales. Has it gotten easier to do a short sale now as opposed to a few years ago?
So much easier. A lot of the people who were focused in the REO departments were transitioned over into short sales when the foreclosures slowed down. During the periods where the banks weren't allowed to foreclose because they had the foreclosure moratoriums, they were shifting people over to short sale. There was more training put in place at that point. I think the systems and the process to do a short sale really evolved. And now there are platforms that the banks use to transact a lot of the short sales online.
Okay. And then I've heard, and I wish I knew the answer here. I've seen stuff on YouTube, and there's all this talk about a bank would rather foreclose because they get more money. And is it true? Is there one or the other that is financially better for the bank?
There's actually a financial worksheet that negotiators use to provide to the investor that says, here is your option with short sale and here's your option with foreclosure. So typically, at least based on the most current market, it seems that the banks are netting more money through the short sale than they are the foreclosure.
Now, is that because the markets have gone up so much now?
I think the markets have gone up, but you have a lot of owner-occupied buyers out there that are willing to pay a higher price for the properties. Whereas if you go to foreclosure, even though there are still a lot of investors bidding at the trustee sales and they are bidding the prices up, it may not be as high as what you could sell it through short sale.
So the open market through a realtor would still end up netting more money than
Correct.
any foreclosure. Got it.
There's still other liens against properties that investors have to take into consideration when they do purchase at the trustee sale. So it may not be financially feasible for an investor to buy it at the trustee sale, whereas if you do a short sale, you're able to negotiate all of the liens through that process to where there's no future liability. You're offering clean title at that point.
Got it. When we first spoke on the phone, you told me a story, and I don't remember the exact detail of it, but I remember thinking, man, this girl puts her boxing gloves on and goes to town. Do you remember that story you told me by any chance?
Which one?
It was something about how your client was either they weren't approving the short sale or something. Tell us that story.
So we had a couple of homeowners that were older at this point, retired, living on Social Security income and could no longer afford their home. They had, I can't remember if they refinanced or they bought at the height of the market, but we were in a position where we received an offer for $270,000 and we could have easily gotten the short sale approved. It was fair market value for the property, and we submitted the full package. It sat with NationStar for about 2 months, and we hounded them on a daily and weekly basis to get the file moving forward. And because they basically have so many files under each negotiator, it just wasn't moving forward in a timely manner. So about 7 days before the foreclosure sale date, they denied our short sale. They said that we were $8,000 off, and instead of countering us, there wasn't enough time to counter us, so they were going to deny the short sale and foreclose instead. So what we did is we went to an attorney who provided sale delay services and basically said to the bank, you didn't follow the protocols, and we want the trustee to stop the sale. So through the sale delay services, we were able to get the foreclosure stopped and buy us a little bit more time. Through that process, I contacted the Attorney General. I sent emails out to our congressmen through their website. I filed a complaint with the OCC. I called the bank 2 or 3 times a day, complaining to any supervisor we could get in touch with. They finally reopened our short sale, extended the foreclosure sale date, and we brought the offer in for the $278,000 that they required, and we are closing in about 3 weeks. So the homeowner was able to avoid foreclosure.
That's great.
And they're
I love
receiving
stories like
relocation
that.
assistance that will help them move into their next home.
That's fantastic. And see, that's what you get when you have somebody that really cares more about the client than the deal. And I appreciate that, because that's how I work. And typically we try and screen all our guests and our expert panel that if they're going to be on our show, they're truly more of the advocate for the person. They are more about their client than they are anything else. If you want to get in touch with any of our trusted advisors and our expert panel members, call us at 949-720-1616. That's 949-720-1616. Or you can look us up online at moneymatterswithdino.com. So either one of you guys, can you tell us about what the Home Affordable Modification Program does for a homeowner?
It's one of those programs I was alluding to earlier. There's a number of them out there. It's just one of the ways a homeowner can possibly apply for and be approved for a loan modification. Most of the time, they don't have to specifically, the homeowner doesn't have to specifically apply for a specific program. Just send their loan modification package to their lender, and the lender will run it through all their programs.
Got it. Okay. And Jessica, now that the values have all gone up quite a bit, do you find yourself focusing on another aspect of that market, or are you just back to kind of like the basics now, regular realtor functions?
I've never been a regular realtor, so I don't know what that looks like. No, the market has changed where I think a lot of realtors are taking their focus back to the regular market with their typical marketing techniques. But I've found that the relationships that I have with the attorneys and working with the short sales and homeowners in distress, it's still out there and it's still available. So as long as it's there, I'll continue to work it while I transition into the standard sale market.
Got it. Okay. And Tim, maybe you know the answer to this. There's a lot of news right now about eminent domain. Can you explain to us what that is and how that is being done in order to save houses?
Sure. Well, there's a few cities in Northern California, specifically Richmond comes to mind, where they've taken homes that have been repossessed, foreclosed on by the banks, and the city has attempted to involuntarily take those properties from the lender or the owner or the fund that owns them, because they treat the properties as blight on the neighborhood. They're a magnet for vandalism, drug use, that sort of thing. So what the cities want to do is either turn those homes into Section 8 housing or some sort of benefit to the city rather than detriment. The problem is that eminent domain laws have always been used for cities and public entities to take land for a real specific purpose. It has to be a public purpose, such as roads or sewer or something along those lines, that's very definable and provable. When you get into a city being able to take private property just because they feel like it's going to benefit their city, that's really crossing a line of regarding property rights that we've as a society have always been really apprehensive to cross. So honestly, as good as it sounds that the city should be able to take over those houses and do something with them, I don't think that's a property right that we should be able to give up so easily, because today it's the city of Richmond taking over a dilapidated house. In a few years, who knows? It could be
Sure.
A city or a county or a state taking over something that we feel is a lot more important. So it's the beginning of an erosion of property rights that I think is actually pretty dangerous. So as strange as it may sound, I'd actually come down on the bank side on this argument.
Yeah, it's funny when sometimes if you read a certain article, it comes off one way and it sounds like a great idea and it's helping, but the way you put it, it makes a lot of sense to me. I think you're right. Once you allow one thing, all you're doing is allowing for more down the road. So something
Exactly.
to think about. Well, we need a break here in just a moment. So you're listening to Money Matters with Dino on K-Talk AM1150. If you have any questions at all and you want to get a hold of us, call us at 949-720-1616. That's 949-720-1616, or you can look us up online at moneymatterswithdino.com. We'll be back right after the break, and we're going to be talking again about fight the banks and keep your home. Remember, your financial future is in your hands. We'll be right back.